It's match day number 38 in the second of the semi-finals in the Share Shootout League, the most vicious, conniving, grueling, unforgiving and long-running stock-picking show on television. This is CNBC Africa, first in business worldwide. I'm Bruce Whitfield. Now, are all the people criticising Zimbabwe's President Robert Mugabe for trying to raise just $1 million for a 91st birthday party at the plush Elephant Hills Resort just haters? And speaking of haters, what's wrong with President Jacob Zuma responding to Sona criticism with a trademark giggle at the beloved country? And if investors were so perturbed by a Curro school separating students, then why hasn't the appetite for the shares diminished? Now, we don't know the answers to any of these ludicrous, perturbing and quite probing questions. What we do know that this is the second semi-final match, the last semi-final match. There'll be none of the bromance we saw last week during our first semi-final when K Live and Gary, the running dog, saved their competitive edge for social media. But on camera, there was chemistry that we last saw in A Few Good Men. Tonight, I want to see blood on the studio floor, at least somebody getting touched in my studio, but otherwise we're going to lose our tempers. We want it to be vicious and backbiting. Now, the producers and the social media team at CNBC have decided to keep a secret from me. They're going to announce both sets of semi-final results next week, Tuesday at 8:30, but only on the Share Shootout League Twitter page. So if you want to know, you have to follow at Share Shootout League. That means the only way of knowing who is in the final will be checking out our Twitter page next Tuesday, and the finalists will come in. Which will be the finalists? Who will be your favourite, or will it be my favourite? I have no favourites. The 3rd of March is our final show for this season of the Share Shootout League. We'll have a live match. We'll take live tweets, and we will crown one of the stock pickers. Did I say twits? As the best stock picker in the land. We must get one of those cardboard cutout-y things to put on their heads. Time now to get into the second of our pairings. Our first stock picker is well accomplished in things like taking his 2 little girls to swimming galas. Our second stock picker has just become a daddy for a second time. His life is over. Be nice to him tonight. Let's check out our next 2 semi-finalists.
Hello, 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 everybody. The Amakosi are not going to like me, but the Bucks is a part reference to my other favourite football team. But most importantly, I wasn't allowed to use Mr. Krabs. Where all you SpongeBob fans will know that who Mr. Krabs is. My ability? Absolutely not. So all the other competitors are far superior to me. All of them. The competition was so fierce and everyone was so excellent. So, most especially Gary. He was very serious about this game, and he said I was a big competitor. Gary took me completely by surprise. And he got married in between. Very surprised. He didn't get distracted for 1 second. Of course, you have to, because if you. But of course, there's a criteria. You can't pick the same company twice. Although sneakily, I managed to do that, and the producer didn't notice. Definitely not. I thought Sid Vianello with. I think Sid's experience is probably, maybe take Chris aside, is as much as all the other competitors put together. They're all far smarter than me, so I have to bring my wit and A game in order to, I have no idea, bamboozle them with the facts. So I have to be very studious in the semi-finals, very, very studious. Definitely the other 3 in the semi-finals. Nick, Gary and Clive are all great competition. Well, I remember Sid Vianello at the beginning said yes, he thinks he's going to win because otherwise he wouldn't have entered. That's the best answer I think I've heard so far. My answer is the same as Sid. He's Venetian, and those people don't even have wheels there. They've got gondolas. To get as many tweets as possible. Because when you're competing against family shows like Modern Family, you need to be much funnier than all the other competitors. This is, after all, a competition, but more importantly, entertainment. I think the winner will be the stock market. As when people say the winner was football or the winner was cricket.
My hashtag is Valueguy, so pretty self-explanatory, follow a value investing process. That means that I'm differentiated in terms of I'm often buying stocks that people hate, really out of favor, the kind of stock that someone will listen and say, is this guy nuts? How the hell can he possibly be investing in that? We all know why that's a terrible decision. And what that means is the stock price is generally down, and that means that pay the right price, you can get a great investment return. No, try as much as possible to pick the stocks we invest in. It did become harder and harder as we went through the show, because a lot of stock prices have rallied, so we're not buying very actively locally and even internationally as well. So it's been hard, but absolutely wherever possible. We did have to reach out further, but in that case we did try and pick stocks that showed the same philosophy. It's been a lot of fun, a lot of hard work especially for everyone involved in it. I think it's a long slog, but it was a lot of fun. In terms of surprises, no real surprises. I think there were a lot of really good stock pickers in there. I guess surprises are that there's some fantastic stock pickers with a lot of experience, guys like Sid Vianello, for example, who didn't even make the top 4. So I guess that shows you the caliber of people involved. Yeah, I hope so. Yeah, I mean, we certainly think that our stock picking is what differentiates us at Lentus, and hopefully being somewhere at the top is a fair reflection, yes. That was the aim, but as I mentioned before, there was very, very stiff competition. So yeah, I guess it's an honor to be up there. Sorry, I have to take the fifth again. Yeah, there's. I think everyone is tough. I can't expose myself like that. Then I'm insulting everyone else. I'll just sit on the fence and I'll be Swiss. I think it's. Hopefully it'll show that they understand, and I've communicated the theory behind what we do as value investors. It's easy to look at it and, as I said earlier, say you're a little bit nuts. So if I can elaborate and show people the underlying reasons on why those particular stocks that I've picked work, and I do that properly, then hopefully they can vote with not with their feet, with their Twitter handle. Let me go with Gary, just because that's from a physical safety point of view. He's the one most likely to beat me if I don't say anything.
Both Nick, the value guy, Norman Smith from Lentus Asset Management, and Sasha Bucks Narishkin from Vestac are eagerly waiting to see whether or not they will face the finals and who they will face the final against. They're vying for your Twitter votes this evening in a bid to make it to that final stretch. But first things first, they've got to get through to the semi-final. By now, you'd have to know the rules. If you don't know the rules, no white shoes. Okay, no, they're fine. Okay, they've got no white shoes. They are already both ahead. They've got to pre-pick 3 shares. Only I know what they hold. Each player's got to accept at least one of the other player's stock picks. They've got 30 seconds to argue their stock pick, and they can choose from the JSE. We give them an offshore allowance. We give them 1 international stock per round. Will they use their offshore allowance with the round as battered and broken as it is at the moment? The rules are out of the way. We're going to get this started, the big shootout. One of you will not be coming back next week.
Oh.
Terribly sad.
So sorry about that, Nick. Oh, okay, sorry. No, this is not prejudged. This is not preordained by any stretch of the imagination.
Twits. You introduced us both as twits.
Okay, so for your cheekiness, you can go second. Sasha Narishkin from Vestac. Nick Norman Smith, you can go first. Now, we did a show tonight with Bruce Whitfield. 4 stock pickers, that's 4 stock pickers. All 4 of them chose this company as their outright favourite for 2015. Tell me why you like Anglo-American.
It's a diversified global mining company, wonderful portfolio, platinum, iron ore, copper, coal, diamonds, very nice spread at a cyclical low. This is a company where investors loved not too long ago, trading at 4 to 5 times book. That book has now been cleaned up, it's trading at less than book.
The only concern I had was money being poured into the iron ore project, Minas Rio. That's been capped, and they've actually started producing, so that's that risk out the way. Solid moves from management. You want to be buying a company like this at a time when there's blood on the streets, and there's literally blood on the streets in the resource sector.
And also Mark Edifani is a good bet, is he not? I mean, there's a guy who knows, he knows his minerals, does Mark Edifani. Nick was on that panel, so he got the intelligence of all of the guys around the table and consolidated it into a very strong view. You're not an Anglo-American lover by nature, but will you take it this time, Sasha?
Sorry, who's your idol in this? If you could pick one guy, you would say, I'd love to be that guy. I would love to follow his investment philosophy. Who would it be?
Yes, you're going to get me with the Buffett selling oil.
ExxonMobil.
Yeah,
Why?
yeah.
Because he thinks commodities perhaps could go more cyclically low. So, I don't know. I mean, there's probably enough iron ore to last us all the way through to 2025. Diamonds, I don't know if they're an investor's best friend. Don't know. I'm going to take a pass on this one.
You're
Give it a wide berth.
Anglo-American.
Shoot it down.
But why though, Sasha? I mean,
I already told you why.
No,
There's
but
enough
that's not
iron
a good
ore
enough
to
reason.
last us till 2025.
And that's the exact beauty of buying a diverse fund. I agree. I'm not bullish on iron ore at all. I think the platinum assets and various other assets are the ones to look at. But I'm not too sure. I'm not clever enough to forecast that. But it's a great portfolio. And those people are still going to need... it's amazing. People were so bullish on resources a few years ago. Now no one wants to touch them. And that's, as I said, that's the time you want
A recovering US economy. QE in Europe, QE in Japan, China not in a dead zone at all, growing
There'll
at
probably
6.5%,
be more
7%.
stimulus in China too.
Demand is there, Sasha. Why won't you love it?
Because a bet on commodities is a bet against human innovation and technological advancements.
There we go. You know what? He's so new age, the Sasha Narishkin. He's shooting
Not
down
a hipster
Anglo-American.
yet, huh? Yeah.
You need a beard for that.
Yeah.
Right, so let's go to your first pick there this evening. We've seen this one on the show many times before. It has been well accepted on the show many times before. I'm not saying that you are inauthentic or unoriginal, Sasha, but swipe this one for me in 30 seconds. Visa.
Visa. Well, you know, if you believe that governments globally need to be able to put more people inside of the net, a la Greece, you know, all the tax dodgers, then obviously there's going to be, you know, more usage of swiping, and it's going to be accepted by the powers that be. They're not going to stifle this. Also, I think more importantly, from a global retail point of view, there are going to be more people swiping. There's 70% of world's transactions are still done in cash, and Visa is just a small margin business.
There we go, big volumes going through Visa. There's a lot to like about Visa. It's been a very popular pick through the series on the show. Are you man enough to shoot it down?
I am indeed. Firstly,
why?
35 times earnings.
30.
You're paying
22 next year. Yeah.
you're paying a lot for that. Talking about human innovation and betting against it, well, there's a lot of very innovative companies out there that are starting to eat the lunch of these traditional credit card companies.
But what Apple is doing, for example, the great innovators at Apple, they are teaming up with the Visas
for now.
Because
it's a great entry point, because I'll give Visa and Amex and MasterCard, they've got a wonderful network and there are big barriers to entry. So what do you think Apple's doing? They're going to utilize that network, piggyback off it, and at some point in time they're going to go, Visa, we don't need you anymore.
What's that
We're
time?
the powerful
What's the time
Apple.
frame? Is it a 5-year, 10-year time frame?
I think it'll be quicker than we think if Apple continues what they're doing. So I don't know who's going to hurt them, but there's a lot of risk there. And 35 times earnings, if you gave me this at 10 and said, look, everyone said this business is terrible, but wow.
What about that threat, Sasha? You talk about innovators. I mean, one of your favorite companies in the world is the biggest company in the world, and that is Apple. They are the world's greatest innovators. Don't they out-innovate these innovators?
Yeah, at some points they definitely do, but for the time being, I don't think that they want as big a network. It's a very intensive company, and they build beautiful products. They're not somebody who's... Look, the iOS that goes along with the beautiful products, they synchronize beautifully amongst themselves, but getting into payment systems, I think is probably a very long way away. For the time being, Visa are now starting to penetrate. Even the Chinese are accepting Visa because they've admitted that their local payment systems aren't as superior.
It's a lovely argument. I would buy the argument, but Nick Norman-Smith says you're stuck with the Luddites on that one. It's your equivalent of Anglo-American. Visa. So last year. Righto, let's go on to your second pick then, Nick Norman-Smith. Talking about so last year, the Baltic Dry Index is at 2008 levels, if not below. Global shipping is in turmoil. There are too many boats on the sea, not enough to put into the boats at the moment. And in 30 seconds, you want to buy Grindrod?
Absolutely. Once again, the time to be buying a shipping company is when the shipping industry is all over the show, and that's why you can buy it again below book value. And what's interesting about this, it really is at a cyclical low. When that turns, there's a lot of money to be made. But this business it's really turning qualitatively. So they're moving into ports, they're moving into railways, which are much bigger barriers to entry, much more high quality businesses that are going to give you stronger revenue streams. And you're not really you're not paying for that. So actually, you're buying a shipping business at a cyclical low, which will generate you great earnings, and you're getting a free option on expansion up into Africa. So it's the Africa growth story without the Africa growth story.
It sounds
price.
like people who want to buy Naspers shares. Look at everything you get for nothing if you buy the valuation.
But the shipping business isn't trading at a mammoth premium, where in Naspers it is.
Okay, Grindrod.
Look, I mean, half of me says no, but the other half says Nick's going to pick a financial stock for the last one. So I have to choose one of his three, and I'm certainly not going to choose a financial services stock, which I bet he's got for the last one. I believe that Grindrod has a lot to offer the continent. I honestly do, but their expertise have been in this market competing against the monopoly for a long, long time. I also believe that, in terms of global shipping, the first container was what, Nick? 1961. It's very new. It's very, very
containers
new.
only
Yes,
on the ship.
yes,
exactly.
And interestingly, I mean, that's not a business that Grindrod's in, because that's basically been loss-making for years. It's
Well, Trenco makes money out of.
But the point I'm trying to make,
yeah, a little bit every now and then, but in between they're big losses.
The point I'm trying to make is that global shipping has advanced dramatically in 5 decades, and in fact, the biggest ever, the South Koreans just released the biggest ever container ship just a couple of weeks ago.
It's like 5 rugby fields
It
in
is
size.
monstrous.
It's enormous.
It's a massive. So
All
I
those
think
containers.
as global trade continues to increase, I buy the story. Plus, also, you have some very, very smart people who want to take risks, and they'll be able to offer African governments who don't have the money to expand their ports.
We're running out of time.
So
I'll
take it.
You take it. Thank goodness for that. There we go. Into your second pick, Sasha Narishkin. This one, I mean, talk about expensive companies. You know he's going to shoot it down. He's going to shoot it down.
No way of knowing that.
The consumer
He doesn't know what my next stuff.
The consumer economy is struggling. There is so much competition coming into this space. We've got Domino's, which is coming into the space. We've got Pizza Hut coming to the space, neither of which are performing particularly well at this stage. Debonair's is still up there in terms of the taste panel, so I am told. But you still like famous brands. In 30 seconds, do tell me why.
Low energy costs are going to give a short-term boost to their logistics business. Now, obviously, the logistics and manufacturing is a bigger part of their business, where they've been expanding margins rapidly. So they want to own everything from the burger patty all the way through to the piece of cheese and the bun, and distribute it. That's where they make their real money. At the front end, in terms of franchising, they own all the popular brands, unleveraged, have the ability to do a big acquisition and spruce up returns.
There we go. There's a lot to like about what they produce. Do you like the company?
I like the company. I think it's a great company.
Do you like the price?
No.
There we go. That's always the problem with it.
Unfortunately, it is. Once again, paying 25 times earnings for a company that has the risks that the South African consumer has over the next while will have a short-term burst. The reality of the valuation of famous brands is not about the oil price helping us in the next few months. It's what happens over the next 10, 15 years. So I just think there's a lot of risks out there, and as you say, a massive amount of competition. So yes, they've got nice brands. Retail is all about scale, and they're building that scale nicely. So the strategy is good, but I just think you're just paying way too much.
I saw dealings by directors, because I knew this would come up. Kevin Hedderwick left 28 million rand on the table. So if he'd kept his shares from 2005, when you could have said, but Kevin Hedderwick is selling, the difference between then and now is 28 million rand. Bad. Come on, directors. You must definitely not sell a quality business.
So where are we going with famous brands? Are you prepared to shoot it down? Because I'm looking at the multiple of the next stock, and we can argue about whether or not the multiple is justified in its current context. The multiple of this share is quite high as well. He knew he was coming up against you. He's throwing the multiple game at you because he knows you hate high multiples. You sure you want to shoot this one down?
It might be better the devil that I know than the devil that I don't, and hopefully it's not Naspers next. But I'm gonna go for the double bluff on Sasha and yours part, and I'm gonna shoot this one down.
There we go. Oh, I don't want to play cards against this guy either. Who will win and who will lose their grin, and who will be left Committing sin. No, that doesn't really make sense, but it did rhyme. So, were you swayed by the new or the old daddy? Who's your daddy? Let's know your thoughts. Follow at SSO League. Use the hashtag. Will it be hashtag Valueguy? That's Nick Norman-Smith, the pink shirt. Or will it be Bucks, the guy everybody was most scared of at the start of the show, but he's turned out to be the puppy of the show? You make the call, and we'll see you straight after this. You're watching CNBC Africa. This is Share Shootout League, the only league in the world that's decided on by its spectators. This is match day number 38, the second semi-final match. We are releasing the results of both semi-finals only on our Twitter page at Share Shootout League. The results will be solely announced on Twitter. Follow at SSO League and find out if your stock picker, your favorite, has made it to the final. Remember, the date for the final match is the 3rd of March. And yes, it will be a live episode, and your tweets will crown the winner 8:55 p.m. on the same day. So it's going to be Twitter fingers ready. Let's get to the final picks of the evening, and for one of these guys, it'll be the last time they pick a stock for this show in this series. If there's another series, I'm sure they're gagging to come back. This is the part where we leave it all on the studio floor. No holds bar. I wasn't joking. Okay, right. Who should I make go first? I think I want to make Nick Norman-Smith sweat more.
And go last. First.
But you've both got such challenging, great ideas. So where are we? Anglo-American.
In the CNBC studios.
You shot down. Grinrod, you accepted. So we're going to go into the third pick for Nick Norman-Smith. You've shot down both of Sasha's picks. Let's make Sasha go first.
Yes.
Discovery.
Discovery.
In 30 seconds, tell me why you like it. Adrian Gore's company.
No, they're basically the Apple of the financial services industry. Look, I mean, Nick and I were talking off air about the Vitality program. Nick's not so, I mean, his Vitality age is obviously lower than mine, but they're innovators,
Clearly because I'm younger, not because of my fitness.
Adrian Gore is a wonderful leader. He still has 7.77%, I think, of the business. And the fact that they're able to white label their product and send it offshore, and it ties in so beautifully to how profitable the life insurance business ultimately is.
I thought you said you hated financial services companies.
Not this one. They're a disruptor. Healthcare. Vitality is designed to break even, Bruce, which means that this is actually an insurance business, but
which is financial services. Just thought I'd point that out.
But it's the health and wellness theme.
You've got to accept it. It's trading on a multiple of 24 times. It is expensive in South African market terms, but a little bit like I think you've justified Aspen before, talking about the global growth prospects, maybe a while back.
I would never have. I would love to have picked it 4 or 5 years ago, but I didn't, unfortunately.
Okay. So would you make the same mistake with Discovery?
I think it looks a little bit pricey, but having said that, if I had to choose one of those three, which I do, this would be the one.
Okay.
It's a fantastic business, great barriers to entry, and most importantly, great switching costs in terms of clients, because what they do is they lock you in with Vitality, and they sell additional products. So it becomes very hard to move because you're going to much more expensive ones, and you're going to hurt your Vitality prospects unless you're at the top rank, which is pretty hard to do. So they've actually had a guy called Dan Ariely, who's a world famous behavioral psychologist, come out to help them design their products. So I can tell you what he does. He designs it in a way that makes you think, whether it's cash back or Vitality points, you think you're getting a great deal, and they're earning high margins. So it's a wonderful, wonderful, very profitable
For those
business.
who are able to milk the Discovery system, you do very well. If you can get yourself up to that platinum status and fly for virtually nothing and go and watch
But
there we go.
the number of people that do it,
see, I don't know.
The number of people that do it are so small that the business overall makes
But that's
a lot
it.
of money.
It's aspirational. They create this dream that you too can achieve it if you jump through the following 85 hoops.
Then you get lazy like me and don't do it, and
And they make money out of you.
Absolutely.
There we go. It's a great business. So you're going to take it.
I am.
You're going into the innovative space, into the first computer company ever, International Business Machines. It's going to be hard for him to shoot it down. I'm going to like this. In 30 seconds, tell me why you like IBM.
This is a software and services business that's been around for a long time. its market cap is $160 billion. It makes $15 billion a year, so 10 times earnings. It's basically half software, half services. The software runs most international businesses. It pulls all the various disparate software packages together, makes them work, and then they service those, and they also run a lot of IT departments. So massive barriers to entry and massive switching costs, which means they can make quite a lot of money. And they don't have the risk of most tech companies where, if there's a new fad that comes along, IBM's out the door. All that happens is IBM installs the new piece of software that comes in.
Seconds is up. You got to like it, Sasha. You
Why?
got to like it.
Why?
Because you've only got 28 seconds.
What left to say
Yes.
that? I don't like it. I know someone put a scrambler here somewhere, Bruce. I didn't hear what Nick was saying. He said IBM, I fell asleep over there.
Why? 15 seconds.
Well, ironically, it took Warren Buffett 50 years of reading the annual report before he eventually bought it. I think he's underwater, although last quarter he indicated he'd been buying a few more. I don't know, just at the end of the spectrum where you could go in terms of excitement. I think they've still got a tough time in cloud computing. Amazon are making great headway. I think they're still very more innovative. Yes,
So
definitely.
The beauty is cloud is just a delivery platform. They're not going to make any money. No one's going to make money on providing cloud platforms. It's commoditized. But what they can do is deliver their software and services over that cloud. So it's
And
not
it's
an
not
old
free
mainframe
software
now
like
it's
Google.
They're going to carry on talking they can find amongst themselves while I tell you that your votes, only your votes can decide. And this is a tough call because these guys are star performers. Both of them deserve to be in that final. Tragically, only one of them can make it through, and it's entirely up to you as to who it will be. Will it be Bucks or will it be Valueguy? We'll announce the finalists next Monday, 8:30, only on the Share Shootout League Twitter page. Will it be Valueguy, Running Dog, Bucks or K-Live in the final? It's up to you. Only you can decide. Don't forget to join us for the final match on the 3rd of March, live right here on CNBC Africa. It's been great. It's been grueling, but it's been super fun here on Share Shootout League until Tuesday, the 3rd of March, for the great big final. Who will stay? Who will go? Who will be here? And who will be left crying into their dinners in front of a TV watching the winners? That rhymed. Do you stay
That did.
Good
Well
night.
done, man.